What is going on, investors? My name's Emmanuel, and man, oh man, what a week this was. I mean, I personally absolutely love red weeks in general because that's usually when fantastic companies tend to go on sale. However, I do think I went a little bit overboard and I ended up spoiling myself this week. I can't lie. I ended up buying a lot more stocks than I planned to. In particular, on Wednesday, I actually had to caution myself because I do think there could be potential for further declines later on. So I had to discipline myself and not burn through all the cash that I have ready to deploy should the market fall further. But that's enough about me. I hope you guys had an incredible week and I hope you did spoil yourself and take advantage of the recent dips. And why not drop in the comment section below the stocks that you purchased this week? It'll be great to hear what you guys were up to. I went ahead and picked up shares in 5 different companies, one of which launched 3 brand new products that got me extremely pumped. And another company that I purchased is a brand new position. And if you follow me on the gram, you know what this acquisition was. So if you do want to stay up to date with my market moves, what I'm purchasing, any new acquisitions, then follow me on Instagram if you don't already. The links are in the description below. So with that said, we do have a lot of companies to get through in today's video. But right before we jump into it, don't forget to absolutely destroy that like button, as it really helps the channel grow, and we are growing at a rapid pace. And I do appreciate your support, guys. And if you are new to the channel, then hit that subscribe button to stay up to date with all my latest stock analysis, all the stocks that I bought in the current week, and also any stock related major news. So with all that said, stay locked in, watch until the end, and let's dive into the video. Right, so my brand new acquisition is, drum roll again, Adobe. Adobe Systems. The ticker symbol is ADBE. And we picked up a total of 10 shares this week with an average price of $479.51. Now, Adobe has been on my watch list, believe it or not, since April. And I did exactly what I did with Amazon. You know, I tried to time Adobe, but the stock again completely ran away from me. And I personally feel very uncomfortable buying at the top because according to the market cycle chart, buying at the top is the point of absolute maximum financial risk, which I personally completely agree with. So with that said, Adobe had a decent pullback this week, and for the month, it's actually down by quite a lot. It's dropped from its highs of $529 a share all the way to $458 a share. And I started buying and my average price is sitting at $479 a share. Now, a quick profile just in case you're not familiar with Adobe. If you've ever used Photoshop, Lightroom, Premiere Pro, Adobe PDF, or any of these Creative Cloud products, then you're using Adobe's products. They predominantly generate most of its revenue via monthly subscriptions. So they are what you call a SaaS, an SaaS company, which is an abbreviation for subscription as a service. And I personally think that's one of the best business models ever. And now you're starting to see large corporations follow suit. I mean, I remember a time where you could simply just purchase like the latest Microsoft Office disk. I'm giving my age away now. And you can download the contents onto your desktop and you're good to go. Now, in order for you to get the latest Microsoft Office, I have to subscribe and pay a monthly subscription charge for Microsoft Office. So large corporations are moving over to the SaaS business model because think about it, it's a constant monthly revenue stream from your customers that's coming into your business and beefing up your financials, especially your quarterly financials. And speaking of financials, Adobe has one of the best financials on the market right now. The year-on-year revenue growth is 16.8%. I mean, just take a look and admire that revenue chart, investors. That is beautiful. And they are one of the stocks that actually benefited from the lockdowns, because when you read their quarterly report, they saw a large rise in the new Creative Cloud users sign up that benefited from the lockdowns because they saw a large rise in the number of users signing up to the Creative Cloud to be able to use their products. And also, if you think about it, the amount of job losses that are on the rise, more people will have to find creative ways to create money. Hence, they sign up to Creative Cloud. I mean, looking at their EBITDA year-on-year growth, it's sitting at 23.5%. And also, it has a deliciously looking growth chart. They also boast a solid balance sheet and a solid cash flow statement. But I do plan for a full stock analysis video on Adobe. That alongside the next stock which I bought this week. So look out for that, guys. It is on the way. And the next stock that I bought this week is Amazon. Ticker symbol is AMZN. And I did give a brief profile of Amazon in last week's video. Again, I will link that in the description below, so check it out if you want to get a good idea of what Amazon do and their products and services. And I do also have a full stock analysis video on Amazon, like I've mentioned. It was meant to go up this week, but I had no idea the market would be that interesting, so I had to prioritize other videos. However, I did buy one more share of Amazon this week. Unfortunately, I did have to average up my cost price, and that now brings my total of 4 shares that I own of Amazon. Now, Amazon went ahead and unloaded 3 brand new products for our customers. 2 are to do with home security systems, which of course we own the Ring systems. And the other is Amazon making another move in the gaming industry. Now, we already know that Amazon owns Twitch, which is pretty much the world's leading live stream platform for gamers. But now we have launched a cloud gaming service this week, which is called Amazon Luna. And remember earlier that I mentioned about companies are now adopting the subscription service business model? Well, guess what? Amazon's Luna will be another monthly subscription service to add to Amazon's already growing portfolio of monthly revenue generating streams. I mean, this company is amazing. It's said that Luna will be priced at $5.99 a month and will place it in direct competition with Microsoft's xCloud, Google Stadia, Apple's Arcade, and also Nintendo. Now, I'll be honest, guys, I don't like the fact that Amazon is competing with Microsoft and Apple in this industry, because as you know, I do own a decent amount of shares in both companies. But hey, it's dog eat dog. I understand this is the nature of business, and may the best business win, and I hope all 3 of them win. Now, the other 2 products that Amazon launched this week was a flying Ring camera and also a Ring car cam security systems device. Now, Amazon are becoming a huge player in the home security space. Now, the Ring car cam will help users to document traffic. It will also help users to record collisions and any road events. So it's pretty much, just a more advanced dash cam. And it will cost between $60 to $200. Now, the flying Ring camera, which I think it is pretty cool, but also I do find it to be quite intrusive. And to be honest, I'm not entirely sure how I feel about it just yet. But it is said to be an autonomous camera that can fly within your home on a pre-programmed route, or can fly to a motion detection area. Crazy, right? When you're not home. And you'll get the Ring alert notification on the app. And to be honest, I do own a few Ring doorbells at my properties, and I do get quite a lot of notifications when there is movement. So to be fair, they are quite handy, and the data is stored in the cloud. And I'm really in 2 minds about the indoor drone system, especially having the flying camera just going around your house recording the data. It is a bit strange, but you do have to admit it is the future, and Amazon are the front runners, and they are thinking ahead. So that's further news regarding Amazon. This company will continue to refuse to keep still. They continue to innovate, they are trailblazers, and they will take new territories. And I'm all for it. So that's why I picked up one more share of Amazon. Now, the third stock I purchased this week was Apple, ticker symbol AAPL. And I seem to be purchasing this company almost on a weekly basis. However, right off the gates on Monday's trading, my price target of $105 was hit, I think within the first half an hour. And I went ahead and I picked up 10 more shares, which brings my total Apple position to 70 shares. And I've set another price target for Apple, which is $100. So if it does hit that price target, then I'll snap up more shares and I'll just continue to buy as it tracks lower. And after the recent keynote event, which Apple released a variety of new products, including the Apple One, the market did have a bit of a negative reaction to that event. And I personally think it's because there wasn't any news really regarding the iPhone 12. Well, the iPhone 12 launch event is almost here. It's expected to take place, I think, next month. And analysts such as Morgan Stanley believe that these prices are great entry prices for Apple. And Morgan Stanley have actually set a price target of $130 a share, which represents about a 20% upside from where it is right now. To be honest, I think a price target of $130 a share is very short-sighted. I mean, in the long term, Apple has a ton more upside than just 20%, and I do see Apple surpassing the $200 a share mark within the next year or within the next few years. Like I said, the iPhone 12 launch event is expected to be next month, and Apple are expected to announce its first generation of 5G capable iPhones, which is really exciting stuff. Now, that's the good news. The bad news, again, has to do with Spotify, because they have now officially joined forces with Epic Games and Tinder. Yes, I did say it. Tinder have also joined a coalition designed against Apple's unfair App Store policies. I mean, I've spoken about this in a few videos now, and frankly, I am getting a bit bored of the whole situation. I will not waste any more time on it, and I'll be happy to see the back of it if I'm being honest. But that was my third purchase this week. Apple, we bought 10 shares. Now, the fourth stock that I purchased more shares of this week was, of course, Workhorse. The ticker symbol is WKHS. And I went ahead and picked up 100 more shares of Workhorse this week. And I'm not going to spend too much time talking about Workhorse, because I did release 2 videos regarding the company's developments this past week. They did suffer a huge decline, but it was a great opportunity to buy dips. If you do want to learn about the new developments regarding Workhorse, the links are in the description below. Plus, at the end of the video, they will be suggested. So make sure you check out those videos. So that's my fourth acquisition, was Workhorse. And the fifth stock that I bought this week was Virgin Galactic. Ticker symbol is SPCE. And I picked up 25 more shares of Virgin Galactic. And this is my most speculative position. I mean, Benjamin Graham does suggest in his book, The Intelligent Investor, that a very small, tiny percent of your portfolio can be speculative. But he does stress that you need to understand it is speculative and you could lose all your money or position. My speculative stock is Virgin Galactic, and I do have a video lined up going into details regarding its new development. So please do subscribe if you haven't already, so that you don't miss my Virgin Galactic update video. And it's going to be a long one, guys. And that pretty much wraps up my week. So investors, do let me know in the comment section whether you took advantage of this week's market dip. Let me know what companies you bought, how many shares you picked up, and also give me your thesis. But with that said, make sure you do your own due diligence before you decide to invest in any stock or in any company. I've said it before, and I will say it again, I am not a financial advisor. Please view my content as purely educational and not investment advice. And if you do want to learn more about investing, especially some books on investment, then there are some useful links in the description below. Plus, my broker Trading212 will send us both a free share if you sign up using the link in the description below. With all that said, guys, don't forget to smash the like button, hit the subscribe button and the notification bell if you want to see more content from myself. Thank you so much for watching. I appreciate every single one of you, and I'll see you in the next one. Thank you.